mentioned at the top of the show, we're out in Heather Ramsey country just north of Brewning, Nebraska. So she was kind enough to join us out here on set to give us a look at what's happening in the grain markets. Heather, good to see you.
Good to see you.
All right, lots to discuss in today's conversation. A lot of planters rolling, of course, but first on the corn front, some excitement midweek here. Corn futures, I saw the current price where we sit today showing the last time I guess we were at that point was February 28th or so. Your thoughts on the corn market?
Yeah, we're back towards like the top end of the range. I think we're very range bound at this point in time. We hit some, especially when you look at old crop, we're hitting resistance at these levels. I keep an eye on the July because I know right now planters are rolling. If we don't have things priced and protected, what little is out there kind of unpriced, we're going to be looking into that June-July timeframe. And we approach 450 futes in the July, and we really kind of stall out. 452, 454 maybe, but then we seem to back off kind of below that. And I think that kind of correlates with what's going on the cash side of the market. We have May sitting between 10 and 12 cents lower on the future side. We're getting enough of a push on basis that 455 cash to 460 cash is really the sweet spot to maybe get a little bit to trickle out of the bins. But yeah, like you said, it is back higher. Haven't seen these levels since February. Limitations though on what old crop can do, just because the whole world seems to feel pretty comfortable with what that supply looks like in the old crop situation. And any sort of upcoming planting delays or weather issues, whatever, it really is going to get focused, that response, on new crop corn and kind of hit that trajectory going forward.
Okay, you brought up the term range bound. I just want to take a second to define that and talk about what it means to be range bound and why it's tough to break those levels.
Range bound really is, when you look at a chart situation, the chart's probably the easiest place to see it. You'll see some top end limitations and some bottom end support. And when we get into markets like this, it's very choppy, not just like week to week, but day to day. So one day we're up 3, the next day we're down 5. And what we see is just this jockeying back and forth because nobody really has a good feel for what should be happening. Whether it's experts, the commercials, the managed money, not getting exactly the information on a day-to-day that would lead us towards putting back together an actual trend. So what we see is a very defined kind of top end and low end. We've been seeing this, I would say, for the last 6 to 9 months. We've gone from one range to another. Unfortunately, our ranges have gone lower. What we're seeing now is it looks like a bottoming out has started to potentially occur. It feels very strongly, the market does anyways, that wheat is probably put in a low. Since corn and wheat can be some substitutes in a lot of situations, it feels like corn is maybe heading that direction as well. So if we get to this top end of the range, everyone's always like, we're gonna go higher. And I was like, nah, we need a real headline to sort of break you out above that, whether it's a fundamental change on the supply side or the demand side, whether it's a macro change that really helps push commodities higher. But right now we're just not seeing any like outlier headline that could really push us higher. So from an old crop standpoint especially, we've just been encouraging people to continue to trickle out of those bins, get things moved. If you have protection on or hedges on still, it's actually turning into a pretty decent basis opportunity here lately. Especially when we look forward, it looks like that spread between corn on the May and the July board narrowing up a little bit. So that helps you take advantage of this basis push that we're seeing going into May and then potentially June delivery slots. So we're kind of in that time of year where it's not real exciting from a marketing standpoint right now anyways on futures, not real exciting. But if you've done the work in the front end, you get to come in and then sort of take advantage of everybody on a carry situation, on a basis situation. So you're not as cash susceptible and you're just kind of taking off the extra little pennies that we're accumulating right now.
Okay, is that a similar story then when it comes to soybeans?
Yeah, soybeans are interesting. So what we're looking at on soybeans is we've really shifted our focus, I think anyways, the market has to sort of that new crop setup. By new crop, we can be talking about the current harvest in South America and then looking forward into what our planting looks like down the road, 6 months or so. So right now we're shifting to what does the 24-25 crop setup look like. This 24 crop, For us anyways, I think we're pretty set acreage wise. This isn't changing. I mean, in our neck of the woods, we're on the verge of being done with beans. And I know we're a little bit earlier than a lot of places, but I think that acreage is set. When you look at South America, there's a huge debate going on whose number is correct. And unfortunately, I think we'll continue to kick the can down the road until we get into May, potentially June, July, before anyone wants to admit either victory or defeat on those numbers. Because when you have WASD saying one number versus CONAB saying a completely different number, the spread being as large as it is, these are some serious changes to the global supply and global balance sheet. And yeah, I don't know who's going to end up winning that argument. I do know from a U.S. standpoint, a lot of farmers, a lot of fundamental traders really feel like the USDA, WASD has missed the mark. But again, that's the number we trade. That's the number the managed money will trade. And managed money has decided that they're right, which is why we've seen this big sell-off, big short positions. So when we are in these range-bound markets, like we are even in the soybeans, when we get to those top ends of the ranges, unfortunately for the farmer, we've got to be able to make decisions and pull the trigger, because whether we believe that number is right or not, this is the information we've been given. And the job is to farm another day, farm another year. And so you've got to take advantage on those high ends of the ranges to protect yourself. Whether we think USDA, WASD, CONAB, whoever's right? So it all becomes sort of a moot point then, and just take advantage of what you can as the farmer.